Here we are with ticker symbol AAPL, Apple Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And let's see what this chart is showing us. So right now, Apple obviously had a run. It's been in a bearish trajectory, fighting the tug of war up and down through the 50-day moving average, jumping above it, falling below it. And it's hit new lows today, as we saw, but it ran up, right? It ran up and then also started to fall again. So the resistance level and support have actually moved slightly, and we're going to see where it's located now. So our resistance level is way up here above the 50-day moving average, and our support is the low of the last couple of hours of the day. So we're going to talk about this between these two, and then also see what the 50-day moving average is showing us. So the 50-day moving average is 118.09. I'd write that down. As long as we're below it, the bears are in control, and the moment the bulls break through it, the bulls are starting to gain control, and we can get back into bullish territory. So the bulls slightly were able to break through it, reaching a high of 118.98 after reaching these lows early in the morning, right, of about 115.69. I mean, that was almost a $3 jump. And then it started to dip, and obviously the sell-off happened pretty quickly. I mean, it lasted throughout the morning, and then right after, a lot of investors started to sell off due to uncertainty or fear, and we're now below the 50-day moving average again. And the support level, this is what the bears want to break through, and that's 116.95. So 116.95, I want to emphasize to all investors, pay very close attention to how this stock is reacting, because we're already in bearish territory. The bulls are trying to fight back, as we can see here in this candlestick, trying to build momentum for tomorrow and towards the end of the day here, the last couple of hours. But if the bears start to tear this down and break through 116.95, I highly emphasize to all investors, pay close attention to how quickly this is hitting newer lows, newer support levels. And we have our lowest point here, which was yesterday at 115.68 to keep in mind. So if you want to write that down, that's important as well. That's a whole $1.30 difference from our support level currently. So we don't have to worry about that just yet, but it is a good point of reference to keep in mind. But before getting there, the first point that the bears are going to try to break through is 116.95. Turn that support into a resistance to continue to tear this down to newer levels and newer support levels. So I want to emphasize to everyone, pay very close attention to the behavior of this stock, to every investor, that 116.95 is the support, and see for yourselves with your 1 minute, 5 minute, 15 minute charts, the outflow and the inflow of who is dominating this chart tomorrow and the days to come. Now, the bulls are going to try to break through the 50-day moving average, 118.09. That's their first step to get back into bullish territory. But to confirm and pull away from the 50-day moving average, they need to cross resistance. And resistance is 118.98. If the bulls accomplish that, they accomplish two things. They broke through the 50-day moving average, getting back into bullish territory, and they've broken through the first resistance level, signifying that they've crossed the 50-day moving average and reached bullish territory, turned it into a support, and they're pulling away from the 50-day moving average in an upward direction. So super important for the bulls to break through 118.98, turn that into a support, and hit newer highs and newer resistance levels. So if the bulls accomplish that, they're in bullish territory, turned the resistance 118.98 into a support, so they can break away from the 50-day moving average, reaching newer highs and new resistance levels as it plays out, pulling away and gaining momentum. And this is the beginning of the catalyst, and crossing the 50-day moving average will actually start to build that momentum and rally for the bulls to continue the run. As always, I hope you guys found this video helpful and informative. If you're a first-time viewer, an investor coming across my channel and encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.